Hey guys, Benny Rabishin. Here is your latest real estate and what is going on with mortgage rates market update now that we're into October of 2023. So here's what we saw in the past month. So in regards to interest rates, let's just dive into the Achilles heel per se of the biggest topic and the headline for the past 18 months, more specifically this year, are these rising interest rates. It's caused an affordability problem. People that want to get into an area either just can't afford it or they're just so spooked by the interest rate. So let's dive into that. So the Federal Reserve met late September. They decided not to raise the federal funds rate, which is the first time they've done that in a very long time. Many of us would assume that maybe that's the start of interest rates starting to tick down. Unfortunately, the reaction of that in the market was based on the rhetoric of the federal chair, Jerome Powell, basically stating that they still think that the economy is fairly strong right now. They're really watching the labor market. So one thing to watch is unemployment numbers going up, a big impact to the labor market. Once we start to see that pain in the economy, which will come, we should start to see interest rates drop. Your average 30-year fix right now is in the high sevens, in some scenarios in the low eights, believe it or not. I can't believe it, but that's where we are right now. We are at 25-year plus highs in interest rates. I've been doing this for 20 years. I haven't seen rates at this level before, but I will tell you that there's light at the end of the tunnel. So let's talk about what's going on with real estate. So one would assume that with these high interest rates, it's just forcing a lot of people to the sideline that just can't afford to get into an area at these higher interest rates because of where these payments are right now. But believe it or not, there still is enough demand out there. And there's what many in the news don't talk about often is there's a supply issue right now. There's not enough homes for sale to satisfy this demand. So while demand has diminished a little bit, we still have a ton of buyers out there that do qualify at these higher interest rates that are actively buying right now. So because of that, we just recorded, and this is Case Schiller, who manages the appreciation and depreciation of homes, just recorded through August, so it's a lagging indicator, that home values for the 7th month in a row have increased in value. I know it's hard to believe that home values are going up even at these high interest rates, but they are. Again, it's simple supply and demand. This year, we are projected and we're targeting to see a 6% average appreciation across the United States. That's pretty wild that home values are continuing to go up. So keep that in mind. If you're an active buyer right now, the homes that you're looking at right now, if this trend continues, and many think that we're going to see another 6 to 10% next year, it's going to be more expensive to get into that home, even if interest rates drop. So let's talk about some opportunity and my buyers right now that are having great success with this. As we go into the fourth quarter, buyer demand typically goes down. So do sellers, right? No one really wants to buy or sell during the holidays. But in 19 years of doing this, I find the best opportunities happen in the fourth quarter. So let me tell you, my buyers that are successful right now, what they're doing. It's giving them a lot of negotiation power. So while interest rates are in the high sevens right now, they're able to go in and make an offer on a house, and you have a motivated seller. Anyone selling right now is motivated. They're able to go in and negotiate some great terms. And what we're able to do in most cases is get a seller credit. We get that seller credit, we use that to get them a lower interest rate. We also call that buying the rate down or paying points. But this is on the seller's dime, not you as a buyer. So it's able to get your payment down hundreds of dollars a month. We had a situation last month where we negotiated a $15,000 credit. We were able to get their payment down $400 lower than what market rates were. So it made it more affordable for them. So there are opportunities out there. It is essential that you align yourself with a real estate agent that understands those strategies and a lender like myself who can help structure those offers for you guys. So if you are a motivated buyer, remember this, as rates come down in 2024, all of these people are gonna come back into the market, and these types of negotiation tactics that we're using right now, I believe will be really hard to come by when you're now competing with multiple people on the same property. So here's my latest update. If you guys have any questions or want to talk about something specific to your situation, you know how to get a hold of me. We'll see you next month.